wasted year, I think, is most certainly not what we are seeing in the commodity space, because as you alluded to, we started the year with our first quarter outlook, basically calling 2024 the year of the metals. So far, that has worked out reasonably well. Quite well actually for especially gold and silver. We're still seeing copper not doing well, still range bound, but potentially on the cusp of higher prices. And we also mentioned platinum, which we do like mostly in relationship to gold. It's obviously been left by the wayside during the current gold rally, but we still see some upside in platinum on a sustained and elevated rally in gold. And then just basically that led us into the second quarter, which, as you mentioned, we just published recently. And we asked the question whether we've seen a low, and that's basically referring to the fact that we had this massive run up in commodities from around 2020 when we all went spending crazy while we were all locked in our homes. We went on a spying spree for consumer goods, and that led to a shortage in raw materials. We had the shipping industry struggling to cope with all the extra demand. And that culminated a couple of years ago. And since then, basically, we spent the last year at least just more or less trading sideways after giving back around half of those very strong gains that we had witnessed during that run-up in commodity prices. And just recently, we've seen some green shoots in the commodity space. And it's not only driven by demand, because I think that's still something that's the jury's still out on whether we are seeing a global growth pick up, but there are signs of pockets of strength starting to emerge. But it's equally a story about supply being either being held tight. We see that in the oil market, or being tight for other reasons. We see that in the copper market. We see that in some of the food commodities. We have also seen recently what happened to cocoa, and we now also seeing coffee moving higher. Silver is interesting. First of all, silver has been lagging gold for the past couple of years, and there's and it's fairly easy to explain that simply because central banks do not buy silver, they buy gold. So that bit that we've seen in gold does not exist in the silver market. At the same time, the industrial metal outlook and the global growth outlook has been somewhat challenged, not least in China during the past year or so, and that has left the industrial demand on in question. But I think the overall is, despite of all this, it's actually been doing very well. I think the supply side start to look more increasingly tight. We have the whole solar panel industry consuming more and more silver, and that's also helping to tighten the market. And just recently, we've seen quite a strong recovery in industrial metals, and that was really the signal that silver needed. And so far, and I'm just looking down now because I'm just looking at the year-to-date performances, and we're actually now up 16% in silver, while gold is only up 13%. And that just a couple of weeks ago, that was silver was down, has performed worse than gold. So we've seen quite a sharp recovery there, and that is tied in with the recovery we're seeing in industrial metals. I would say most importantly, the bounce that we have witnessed in copper prices. They're both to a certain extent tied to the green transformation. Copper more also to the AI craze, which is requiring a lot more power and a lot more need for power transmission or transmission, and that's also playing its part there. But generally, a recovery in industrial metals, especially copper, which we foresee will happen because of tightening conditions, will also underpin silver. So wherever gold goes, we believe silver will go probably a bit faster. And with that in mind, the recent highs that we saw were a few years ago around $30 I think is potentially within reach by its own success. Simply meaning that the surge we had in prices a few years ago led to a massive response from producers. And it is the old saying in commodities that the best cure for a high price is a high price, because the high price has basically become the cure, because the high price attracted increased supply, increased production capacity. Sites that were not economically before were suddenly opened up, and that led to increased supply. At the same time, demand has recently showed a little bit showed some softness, and that has been enough to send prices sharply lower. But just like the high price was the cure, now the low price potentially would be the cure as well, because we have seen in recent months that some of the major miners have announced some production cutbacks. Basically, some of the sites that they reopened, which were economic at higher prices, are no longer viable, and that basically means they will start to make cuts in supply, and that will help balance the market. And I think we are potentially seeing this market starting to flattening out before moving higher again in the coming years. But it was most certainly a question of a market that went too fast, too high, too soon, and the response from producers to that was really the reason why we came straight back down again. So markets where you have that ability will see these gyrations. We're not seeing that in a place like copper, because new copper mines will take 5 to 10 years from the decision to the actual production starts, and that basically means that we're not seeing the expected increase in demand being met by an expected equally increase in supply, and that's why we're seeing some of these markets remaining tight, even though prices may start to move higher in the coming years.
We've seen from the chemical tanker industry that they have highlighted the lithium production in Australia, and they're saying that the economics is not as great as in other countries, but there's a political will to have this production in Western countries. Is this something you see? Is this a trend going on, and is this viable given that the economics is not always the same as in cheaper countries?
Well, it's part of the deglobalization, which really has accelerated since the pandemic. The sudden realization that basic goods that you needed suddenly was in short supply, and you couldn't get it for months. And also, I think the general breakdown in trade relationships and suspicion against each other has basically led to this reshoring of production, and yes, you that may mean that we may see some industries that it's no longer the question of where can you get it the cheapest, but where is the safest to get it, and that may potentially prolong or prevent prices from moving significantly higher, simply because, as you mentioned, governments will be adding some handouts in order to ensure that production is that demand is being met by local production. We're seeing that obviously in uranium production. We're seeing that in also some rare earth production in the US, which has almost has suffered a slow death in the past couple of decades. Now it's being revived just in order to ensure that we don't get these supply chain disruptions. Certainly a question of supply being fairly stable, even though it's South Africa and Russia. But at the same time, as you mentioned, that the automobile industry is moving away from diesel towards electrical vehicles and also hybrid and still gasoline, and that seems to have been supporting platinum more than palladium. Also, there's been some switching from palladium to platinum following the very, very expensive high prices we saw in palladium in recent years. But generally, both sectors have suffered quite a bit recently. Maybe not in absolute terms, but most certainly in relative terms. If you look at something like platinum relative to gold, the discount right now is around $1,350, trading below gold. We have never seen a discount this great, and that basically makes me believe, considering it is a relatively small metal, it is a metal that if it does suddenly start to attract investment demand through ETFs and so on, it could tighten up the market fairly quickly, and I could see that discount to gold being driven down quite substantially. But generally, investors in ETFs have not been the driver of these rallies either. Gold ETF holdings has been on an ascending trend since 2022, when the US started hiking rates, and the same thing goes for the minor metals. That ETF investors, which are asset managers, they're simply not interested, and you can say they're missing out on a major rally. But as long as the cost of carry is too high as it is, as it still is, with the cost of funding position in dollars still being around 5 or even higher percent. That needs to come down for these real money allocators to start look in the direction of these metals, and once that happens, potentially not only because of the lower funding costs, but also from the potential boost it would do to the industrial demand, we can see platinum start to claw back some of this discount to gold that has been building up in the last couple of months.
Do you think there's a chance that we are too quick to write off these metals the way we've been writing off coal, and then that we can have a similar development, for example, in palladium, that we still have a robust demand, but the supply dries up or shrinks?
I think we should most certainly not rule that out, and also we have to consider that the production is coming primarily from South Africa and Russia. South Africa have their own problems to deal with, and that basically means that the supply side is one that's not a given. So that needs to be taken into consideration. We've seen some of the electrical vehicle craze start to moderate a bit. Prices are really being slashed in order to stay competitive. Probably a bit of overcapacity when it comes to production of EVs, and it could just indicate that there are certain parts of the world where the transition is away from fossil fuel based vehicles or combustion engines towards EV is not going as fast and as expected, and so yes, so the demand side is potentially one that could surprise as well. So I would most certainly not rule them out. And again, if you are in a world where inflation is an issue, where you are looking for tangible assets with tight supply, then you don't really find them more tight than something like palladium and platinum. The biggest issue, probably from an investment perspective, is the liquidity in the two, and that basically makes it metals that for some investors is a no-go, simply because the size of position you can build is relatively small, just simply because of the risk of your slippage when you have to get out, if you have to get out of position going against you. So liquidity is a bit of an issue, but if you get to with these current price levels or discounts relative to something like gold, then I would say it's most certainly something that investors should have on their radar.
We've seen that lithium has enjoyed quite a bit of hype in recent years due to the green transition. And where do we stand in terms of lithium at this point?